and economist Paul Samuelson once said, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. Well, that's a philosophy that resonates with the team at Lightspeed India. The venture capital firm invested in Oyo Rooms in 2013 when it was a 2-hotel business. And in 2019, when Ritesh Agarwal, founder of what is now the world's fastest growing hotel chain, wanted to buy back equity, Lightspeed walked away with an estimated $1 billion made on an investment of just $28 million after selling half of its 13.4% stake in Oyo Rooms. Now, this was the biggest cash out that the Indian startup ecosystem has seen so far. With assets of over $300 million in India, Lightspeed has been creating a coveted space for itself and is now one of the top venture firms in India. It owns stakes in unicorns like Byju's, Uran, Oyo, and continues to back startups that have the potential to create valuable businesses like ShareChat, Shuttle, LimeRoad, Fresh Menu, and many more. Hello and welcome to this very special edition of Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan, and with me is the team with the Midas touch, the investors of 2019, Bejal Samaya and Dev Khare of Lightspeed India Partners. Dev and Bejal, many thanks for joining us. Let me get to the two of you to give us a sense of how 2019 has transpired for you. Clearly, it's been a blockbuster year. Bejal, let me start by getting your thoughts on 2019, the year it was.
Thanks, Shireen. Thanks for having us on the show. It's great to be here. 2019, I think, was a special year in many respects for the firm, but it really was the culmination of all the work that we've put in over the past 12 years that we've been investing in India. And I think one of the things that we've learned is just to build conviction and keep doing what makes sense to us, regardless of where the markets are, regardless of what is hyped at that point in time. And I think, really, in a sense, the biggest validation or reward that came for us as a group in 2019 was just, in our business, you get feedback in 8 to 10 year cycles. And so I think it was just a year in which there was some validation that the way we're going about our business, which I think is different, is authentic to us, but that, that way is yielding results. And that I think is important for us to just stay the course and keep doing what we've been doing.
Yes, Dev, just to add to what we heard there from Bejal, and of course talking about the India experience and what you've seen here, but if you could link that to what we're seeing globally as well, because globally 2019, if I could call it, was a year of a bit of a reality check with what's happened with SoftBank and Uber and WeWork. What will that mean for the Indian startup ecosystem as we head towards 2020?
Yeah, Shireen, on that side of things, there's a few different investment themes that we are investing in India and globally. There's broadly a consumer side of things that is very exciting, and we can talk about that. There's also the B2B and enterprise side of things. And I think when it comes to what you were just talking about, sort of having more of a focus on, profitability and economics and all that, I think there are businesses on both the consumer side and the B2B side that are progressing very nicely in Lightspeed's portfolio around the world. We are present in the US, of course, China, Israel, and India. And in all these geographies, we've got both sides, B2B and consumer, doing really well. On the consumer side, we've got a company like Byju's that just today talked about turning a profit in 2019. I think one of the first unicorns in India to do that. I think the reality also is that in venture, companies start out, they lose money for a little bit of time, and then the hope is that they become profitable over time. We're seeing strong progress in our portfolio on that front.
Strong progress on the road to profitability, at least as far as your portfolio companies are concerned. Since you brought up Byju's, Bejal, let's talk a little bit about that. And yes, you're absolutely right. Turning in a profit of 20 crore rupees for 18-19. That's the latest development there for Byju's. 40 million registered users, 2.8 million paid subscribers, net revenue of 1,341 crore rupees. The target that they've set is 3,000 crores over the next few years. Bejal, this is one of the big investments that you made out of the first fund. Your first fund, of course, was for $135 million in 2015. You clearly continue to be believers, not just in Baidu's, but the edtech space?
Yeah, Shireen, actually, I think we're believers in the opportunities in India broadly. You know, one of the things that we've realized is that there are opportunities everywhere. If we think about what's happening with technology adoption in this country, it is making its way into every segment. It is making its way into every industry. Education is one industry. Hospitality is another. Logistics is a third. If you think about it, today in India, the largest retailer is a digitally native business. The largest transportation company is a digitally native business. The largest hospitality company is a digitally native business. The largest travel agent is a digitally native business. Yeah. And I think that, you know, this theme is going to continue. It is going to accelerate. The largest education company, you know, will be digitally native or is digitally native. So the opportunities that we see really sit at the intersection of these large industries and technology. And then what it takes, obviously, is you know, is a special entrepreneur to uncover that opportunity and to sort of, you know, in a sense, show us the way and identify how they're going to use technology in a disruptive way in any of these industries. I think logistics, for example, is one that, you know, it's a very large industry that is, you know, is plagued with leakage and a lack of transparency. And I think we'll, you know, if we're sitting here 2 or 3 years from now, we'll probably add that to the list as well.
Okay, logistics is going to be one of the trends to watch out for, and of course a big unmet demand there, a large disorganized market that is waiting for a disruption of the kind that Bejal was speaking of. But Dev, you know, let me address one of the issues that we just spoke of, and this is the global aspiration for Indian startups. Let's use the Baiju's example because that's what they're hoping to do now, is take the global leap. Do you see this as being something much more aggressively being pursued now come 2020 onwards, given the size and scale of Indian startups and what they've been able to achieve here in the domestic market?
I think that's definitely a very positive step. I remember even 5 years ago, 7 years ago, people saying there will never be a consumer brand from India that expands globally. I think we clearly have a different level of confidence in the founder ecosystem in India today. India is a complex market to operate in, and if one can make it work in India, that operational expertise can be brought to bear in lots of other emerging markets and potentially also to the developed countries like the US and Europe. I think the other side of the equation here is that on the demand side, you know, there's a big demand in India for all these services, logistics, as Bejal mentioned, and education and entertainment and all sorts of things. But that demand also exists in Southeast Asia. It also exists in Latin America. That demand in a more mature form also exists in the US and Europe, and maybe companies can address those. One of the things that really surprised me a few years ago when I started looking at international expansion for our companies was that Redbus, which is a company that was that had a very nice exit a few years ago, is the #1 bus platform in Latin America.
Well, we do hope that there will be many more to come. But just to take that point forward, and I think I heard Weber talk about this, you know, when we talk about the quality of Indian startups as well as what they've been able to achieve, he was giving us the example of ShareChat and Udaan and how they've grown faster than their counterparts, for instance, in the US. Bejal, you know, give me a sense of what you've seen change, how you've seen the Indian founder ecosystem, startup ecosystem evolve over the last few years.
You know, I think this is what's most exciting, Shireen. When we started investing, when Lightspeed started investing in India in 2007, you know, just to take us back to that point in time, there were, I think, 16 million broadband connections, and I'm being kind with the definition of broadband, right? These were the 256 KB dial-up connections. Aadhaar or any of the digital financial infrastructure that is available today was not even present as an idea. And then in terms of entrepreneurs, I would characterize the entrepreneurs that we would have seen back then as being fairly conservative or even defensive, right? You know, where they would have thought about owning a big chunk of a small pie. You know, let's fast forward to where we are today. 400 to 500 million internet users, primarily mobile. the significant digital infrastructure that has been built around identity and financial services and payments. And entrepreneurs really that are world-class in every sense, in terms of their boldness, their provocativeness, their desire to build something big, their confidence, their openness to learning. It's night and day. And entrepreneurs really are the raw material of the venture business, so that is the part that excites us the most as early stage entrepreneurs. And then I think, you know, you're seeing this point you made about companies like Udaan or ShareChat and the pace of acceleration that they've seen. I think that is the result of you know, really talented entrepreneurs attacking large markets with very strong tailwinds. And seeing the, you know, with products that are serving real needs, and seeing then the effect of that, right? Growth is in a sense a signal that you've hit a nerve, and this is, you know, provided that it isn't subsidized, and that's one of the challenges in the consumer space. But in these kinds of companies, I think, you know, this very strong organic growth is just evidence of what can happen in this country.
You know, Dave, Bejal talked about some of the tailwinds that have helped Indian startups like Udaan, ShareChat, etc. But let's talk about some of the headwinds. And what would you believe are the key headwinds that constrain startups from being able to achieve the kind of growth that they are capable of? We have seen some changes in the regulatory environment, especially on the tax front, etc., which should hopefully ease the constraints. But, you know, if we were to do the India-China comparison and, you know, talk about the number of unicorns China has and the number of unicorns India has, and I don't want to chase that argument, but from a regulatory environment, from possible headwinds, what do you believe continues to constrain Indian startups and the Indian startup ecosystem?
Yeah, I mean, like you said, I think the India-China comparison is fairly overdone and a bit meaningless. I think the basic rationale and thesis in India is that people everywhere around the world have similar needs. And they'll use the internet to serve those needs, and companies and entrepreneurs will come up to serve those needs, whether it's eating food or traveling somewhere or sending your kids to school or you know, getting an education or whatever it is. The needs are similar. They've just come along a bit later in India because the internet came along a bit later over here. In terms of headwinds, like Vijay said, a lot of headwinds have been removed. Payments was a barrier before. I think one big headwind that's been removed over the last 10 years, and it takes a decade to remove, is the ability of the Indian consumer, the mass consumer, to know that the internet can benefit them. So I don't see any big headwinds. I know we keep talking about the GDP growth rate sort of goes up and down over time and so on. But good companies are created in up markets and down markets. And we as Lightspeed have consistently continued to invest no matter where the market is, where the tax sort of ecosystem is, tax regime is, all of that stuff. We just continue investing because good ideas come along at all times.
Bejal, you know, do you see more consolidation in 2020? I mean, let's just use the Zomato and Uber Eats possible deal as an example. Given the fact that the focus now very clearly has shifted to driving profitability, do you believe that consolidation is going to be a big theme that will play out?
Yeah, I think it will, but it'll be related to whether this, you know, this shift in the financing environment holds true, right? So if capital gets tighter, and there are multiple companies in a particular space that are competing, that are increasing the capital intensity of that industry, that are to some extent destroying the economics of that industry, then I certainly think consolidation is the natural path to restoring price integrity or economic integrity to those markets. So yes, I think we'll probably see more of that if the financing environment softens. That said, you know, that consolidations are also very personal things. There are founders of companies that need to come together. The chemistry needs to work. They need to see eye to eye. So sometimes things may make sense on paper, but they may not make sense in practicality. But yes, I would agree with your point that perhaps we'll see more of that in 2020 than we've seen in 2019.
Dave, before we let you go, I mean, the Indian market is at an inflection point. You know, we've seen the data boom. We've seen penetration being driven significantly on account of data prices coming down. I mean, mobile gaming, cloud kitchens. These have been some of the themes of 2019. What are you going to be watching out for as we head towards 2020?
I think just to underscore the point you made, there's been a pretty big widening of the number of opportunities available in the market in terms of the sectors that are active when it comes to the internet. You know, 10 years ago, 2009, I think that's when Flipkart got funded, if I have my data right.
Yes.
You know, e-commerce was the only game in town for the few years after that. And we saw the funding boom in e-commerce in 11 and 12, if I'm not mistaken. But since then, the market has expanded considerably. So we're going to see more of these sectors deepen and broaden. I've already mentioned the enterprise and consumer side. I think both sides will deepen. On the consumer side, we've seen, you know, various sectors that are active. There's lending or fintech. There is insurance. There is food. There is transportation. Lots of different types of transportation out there that people are talking about. There is entertainment and social media and education and health. There's all these areas that are broadening out where we're seeing companies appear where 5-7 years ago there was nothing. You know, I remember 5-7 years ago, everybody thought the Twitter of India is Twitter, the Facebook of India is Facebook, the everything of India is from somewhere else. But that's clearly not the case today with companies like ShareChat and Daily Hunt and all these other companies out there, right, in the market. So that's going to continue to deepen and broaden. On the enterprise side, I think one big theme I'm looking out for, we're looking out and investing behind here in India is enterprise technology for India, SMB technology for India. I think historically people have said, you know, it's not a big enough market and Indian companies don't want to buy and pay for technology. It's clearly not the case. We've got a company called Yellow Messenger that is bringing chat conversations to all the big companies in India to interact with their customers. We've got companies like Darwinbox that's bringing HR technology to companies in India and Southeast Asia. All of that is being adopted. OK Credit, a very simple piece of accounting software, has now been adopted by 5 million small businesses out of 60 million small businesses in India, growing very fast. So I think that's a story that's going to emerge even more next year.
Well, Bejul and Dave, we wish you the very best of luck. Thanks very much for joining us here on this special edition of Young Turks, sharing the Lightspeed story with us. And we look forward to more conversation in 2020. We'll take a quick break, but catch the success story of Emirati mall developer Lulu Group International. That's coming up for you on Young Turks just after this show. Welcome back. You're watching Young Turks. For decades now, Emirati mall developer Lulu Group International has made rapid strides towards becoming a world-famous retail giant, thanks to not just its massive retail footprint in Dubai, but also its expansion plans across the Middle East, East Asia and India. Jude Sunnit tracks the company's Middle Eastern journey to find out the secret to its success.
It may boast of 178 stores and 55,000 employees today. But back in the 70s, the Lulu Group was taking baby steps in Abu Dhabi. Yusuf Ali, who is now its chairman, was barely out of his teens then and had just left Thrissur in Kerala to join the fledgling family business in the Emirate. The group's first venture was in the food business, catering to the expats who had slowly begun making a beeline to the UAE.
Oil was being discovered, small suburbs were developing in the outskirts of Abu Dhabi. And a lot of expatriates were coming, especially European expatriates coming in this field of oil exploration and stuff like that. And what they needed was obviously food. And this country did not have that time a lot of local production of food or food-related product. So that's where Mr. Yusuf Ali found a niche.
For a while, it was bootstrapped and operating solely on profits. And then a loan from the Bank of Baroda helped the Lulu Group begin expanding its then nascent food processing business. It opened sourcing centers in the Far East, distribution centers closer to Abu Dhabi, and in due course, a supermarket in the 1990s. The turn of the millennium saw the Lulu Group pioneer the hypermarket concept with 3-storied malls where you get anything under the sun, from groceries and apparel to electronics and cosmetics. The The Lulu Group's Al Qusais hypermarket would go on to become the first of many it would open across the Middle East and beyond.
2018, the company closed a turnover of roughly 8.1 billion US dollars. We are now present in 22 countries, out of which 10 countries we have our retail operations, which are shopping malls and hypermarket supermarkets. Other countries such as US, New Jersey in US, or Birmingham in UK, or Spain, or Africa, or Far East, or China, we have our sourcing offices from where we get everything from food to non-food to grocery to electronics and garments.
With its presence firmly established in the UAE, the Lulu Group is looking to expand its presence across the Middle East, India and the Far East. Its first stop, Egypt. As part of its expansion strategy, the Lulu Group will invest $500 million in the Egypt market. The idea is to develop 6 hypermarkets and 4 mini markets to gain a foothold in one of the Middle East's most populous countries. This is a massive scale-up of its present-day foothold in Egypt, which stands at just 1 hypermarket in Cairo. In all, the group will invest between $4 and $5 billion to launch malls and hypermarkets in India, Saudi Arabia, Malaysia, Indonesia and Egypt. Nearly 27 of these properties will be launched in 2020. Saudi Arabia, meanwhile, will see its Lulu store count rise from 21 to 50 by the end of 2021.
Even if you go with the conservative figures of investment per hypermarket, we're talking about 100 million roughly dirhams per mall, so you're talking about roughly 2.7 billion dirhams earmarked for near future. But if you look at the expansion on the paper, which is going to come about next 3 years, we're talking about somewhere around 4 to 5 billion US dollars in expansion across Far East, India and Middle East.
India will account for a neat $2 billion of this investment, with Lucknow, Bengaluru, Hyderabad, Chennai and Thiruvananthapuram getting their Lulu malls over the next 3 years. Gujarat will see the group open a food processing unit, and the newly demarcated Union Territory of Jammu and Kashmir will see a sourcing and logistics hub for the export of Kashmiri apples to the UAE. But the group is firm in its belief that the Middle East and Africa holds the heart and soul of its business. The key to doing well in these markets, it says, is rather simple.
Our key to success would be customization and localization. So no 2 Lulu hypermarkets are same, unlike other international players who might be following a very rigid SOPs when they do business. So if you come to this hypermarket, the product offering we have is keeping in mind the near catchment area. If you go to maybe a shop in Barsha or a shop in WTC World Trade Center, you might see a totally different offering.
With its expansion blueprint more or less pinned down, the Lulu Group now has its sights set on Dubai's much-awaited Expo 2020.
What better place than one location where you're going to talk to the heads of states or the heads of business enterprises. We thought, if not here, where else? This is our home, and Expo is the biggest event which is going to showcase UAE and the business around it.
But even as the promise of fruitful international expansion has begun sinking in, the Lulu Group knows big spending will continue to come from within the UAE. That's why the group is also falling back on untapped markets within Dubai. In a departure from its tried and tested hypermarket launch strategy, Lulu plans on operating smaller stores in the suburbs of Dubai and Abu Dhabi.
That's a great opportunity for us to start and spread our brand to move away from the city, which has already been covered by us, or rather matured, to new suburbs, which is what we have. So all the new residential areas in and around main cities is the target audience.
Another plan that the Lulu Group is excited about is its gradual but steady move to e-commerce. Launched a year ago, luluhypermarket.com has enabled the group to service 10 countries across the world, including India. A year from now, phase 2 of Lulu's e-commerce foray will cover all countries in the Gulf Cooperation Council, or GCC. But the company maintains that its good old brick-and-mortar stores will continue staying strong, at least in a market like the UAE, where shopping is intrinsic to the nation's way of life. In Dubai, Jude Sunderland.
With that, it is time for us to wrap up this edition of Young Turks. Check out all of our stories and more on CNBC-TV18.com. Ping us on Facebook and Twitter. You'll find us at CNBC.